Okay, so I'm gonna write down again, down here by itemized. I'm gonna write, this is used instead of the standard deduction if it's more. So let's suppose that you can deduct all this stuff that you've paid for your business, and it ends up being more than $12,950. Then you can do it that way. Most people take the standard deduction, but some people are in special circumstances where they're paying so much for basically out of pocket for a business or something like that, where they need to take the itemized because it would be better for them, more cost effective. Okay, we're going to start doing taxes tomorrow, but today, like I said, we're going to be talking about this, how to read a tax table. This is called a tax rate schedule. I am going to write one more thing on here, so don't quite put it away. A tax rate schedule is a many-paged document that tells you how much you owe in taxes. To answer your question in a different way, Sam, there's a lot of things that the government doesn't know about you, and most of us would prefer it that way. For example, the government doesn't know, did I have a baby last year? Should I be taking another child off? You know what I mean? Like, should I get another deduction for having another child? It doesn't know if I bought some property. It doesn't know lots of things about me. So I have to be responsible basically for recording all of those things and explaining all of those things for myself. Okay. Okay, so let's jump to this worksheet instead now. This is a very small section of a chart, and this is an old document, which is why, you know how I've been going kind of out of like these books or whatever for this class? This chapter, this is the only worksheet we're doing out of this book, and I'm going to just make everything else up myself, because the tax information in that book is 8 years old, yeah, and there's actually a lot of stuff that's changed completely in taxes since then. For example, look at this. This says, if your taxable income, that means income after you've subtracted all of your deductions, is at least $12,000. Now, you might be looking at this $12,000 and think, hold on, I thought we get at least $12,000, right, to live by? But this is after they've deducted that. That's after they've taken away the $12,000, $950, which, by the way, changes year to year. So that's not something that's always stable. So let's suppose this was this year. How much did this person actually make? 1 second. Anybody know? So if they had $12,900, if they were single, that was just tax-free, then how much money did they make total? You guys confused about what I'm asking? Okay. So they get $12,900 for free. That's taken off their income, and now they've got a taxable income. That's how much they're actually taxed on. And if this person is taxed for $12,000, then how much money did they actually make? How much? $900? No, this is how much after they've subtracted that $12,900, yeah? $24,900. That makes sense to you guys? So they actually made $24,900, and then we subtracted $12,900 because they shouldn't even be taxed on that stuff because that's what they just get to live. And now they've got $12,000 still we have to tax them on. And then we've got to see how much. Okay, so this says at least this much but less than this much. What were you going to ask me, Triton, by the way?
So you said that 12,950 number changes from year to year.
Mm-hmm.
Is it always just a gradual incline?
So far it has been, although it will stay the same for quite a few years sometimes, and then it jumps all at once. There used to be something called exemptions, where you could take personal things for yourself or your children, and then they kind of rolled it into a standard deduction and really upped the standard deduction all at once. So, all right. This is if your taxable income is at least this, but less than this. And this is what your taxes, single, married filing jointly, married filing separately, and head of a household. So let's look down the line. Let's say that you were in this very first line here. Everybody look at the very top line. If I was single and my taxable income was $12,000 to $12,500, how much tax would I owe? 1,385, right? Okay. Why do you think it's a little less if you're married filing jointly? Yeah?
Because the government offers incentives to married couples because they're more likely to have kids.
That's right. The government offers you incentives if you are married, because they think that that will help our society. Married filing separately is just as much as single. Why do you think you would be married filing separately? That could be a reason because one of you owns some property or a business or something that the other person does not own. So it's not something where you might be married, but you might have different assets that you want to keep separate. Head of a household, what do you think that is? Yeah?
Two individuals might be married, but there's only one income.
No. What this is, head of a household, that would still be married filing jointly. Head of a household is when you're not necessarily married, but you are supporting a whole bunch of people at once, and you are considered a head of a household because you have a large group of people that you are with, that you are responsible for, and therefore you're paying slightly less. It's basically a discount if you are in a position where you are in that sense. Okay, so here's a question. How much does a married person filing jointly owe on the following amounts? Let's try number 7 together. $12,050. So you're going to go down the line. It says at least $12,050, but less than. So it looks like we're on that second line. How much does a married person filing jointly make?
1,200.
Well, not make. They have to pay $1,208. It was right here. Let's jump down to if you are single. Let's do number 18, single, and you made $13,953. Looks like we have to go to the very last line here. It's more than $13,950, but less than $14,000. And you're single. Looks like $1,678. Do we pay the same amount on taxes every year? Let's suppose my income was exactly the same, 2 years in a row. Would I pay exactly the same amount?